I love it. The second the camera comes on and I'm just coughing. All right, you guys. So many times this is fun. Don't you love it when you're right? Come on. Especially you guys, when you're in couples or whatever, we love to be right. We love to be right. Well, guess what? I nailed it. Once again, this update is about another way that we watching the industry from the lender's perspective, and we nailed it. I wrote an entire white paper on what we're going to be talking about this moment, and God, I just love being right. Okay, so what am I talking about? We just last week there was a Wall Street Journal article basically saying that some of the big banks, U.S. Bank, Wells Fargo, a Citibank, and J.P. Morgan Chase, all these banks have basically said, you know what, we're going to support Biden's efforts, his initiative to expand credit to non-traditional borrowers. So, all right, so that's a big sentence. What do I mean by that? Well, Biden, some of you may remember where they were talking about a new credit bureau, right? That's going to take over all the other credit bureaus. Psh, that's what I addressed in my white paper. That's a bunch of malarkey. They're not taking over the current credit system. What Biden is proposing is that they're going to establish a public credit registry that focuses on the 50 plus million non-borrowers out there. They're called the credit invisibles, which means they are not part of, and I showed up here, they're not part of the current credit system. They don't have auto loans through that report to the bureaus. They don't have credit cards. They use they use finance companies, or they use the payday loan types. They're relegated to these high interest predatory lenders, the rent to owns and the like. They do all of this because they are in the hang on, let's just get rid of. There we go. Got it. Okay. Moving right along. So all of these credit invisibles are not participating in the low cost, low interest borrowing credit system, right? And none of the places where they go to shop or rent to owns or any of these payday loans report to the bureaus. And so they're invisible to the traditional borrowing. Biden says it would do a huge benefit to our economy if these other 50 million borrowers could be a part of the system and to improve their lives. The credit invisibles, these potential borrowers, give them access to low cost auto loans, low cost credit cards, low cost and even business opportunities where they currently can't work with the SBA, the Small Business Administration. So his idea is this new credit registry focuses specifically on non-traditional payments that are being made. And the idea is that people who pay their cell bill on time, their utilities on time, their rent on time, they have the discipline that takes just if you had a traditional credit account, like a car loan, your mortgage, or even having a credit card. So the discipline is still manifest. It still shows up in these non-traditional payment types, these non-traditional account types. So that was big brouhaha. What, a month ago, six weeks ago, where the media made it sound like, oh, he's taking over, where he's going to eradicate the current system. That's complete BS. This new credit registry, this new credit bureau, is designed to qualify borrowers who with using these non-traditional accounts. Well, guess what? Last week, the Wall Street Journal is saying J.P. Morgan and others plan to issue credit cards to people with no credit scores. And so again, the media does what it does. So let's interpret this. What the actual agreements were is not to offer credit cards, but to offer the credit payment histories, like checking account balances, so that they know how close to zero. For those of you who've been to my boot camps, how far away from zero you are is actually very meaningful, right? How many bounce checks you've had, and then they're starting to collect these other alternative or non-traditional payment methods. Once you have that information and you start reporting it to this new credit registry, then this new credit bureau can start adding, probably going to use FICO. FICO Ultra is already designed to measure these alternative payment types, but they haven't said who they're using. But they want to have a credit scoring system so that they can evaluate. My bet, I'm gonna put myself out there like I always do. I keep being right, so we'll see if it continues. But I believe they'll use a FICO model to evaluate these credit accounts, all right, or these non-traditional credit accounts. The cool thing is that so 50 million people plus, many of these millions have checking accounts, but they don't have any other information or accounts that are being tracked by FICO or lender software. So the good news about all of this is that, and we'll keep you posted, these are insanely powerful steps that are being made by the financial system. And in my white paper, I want to use this example. Why haven't we addressed these issues before? Well, the metaphor I used was NASA and SpaceX. Our federal government is designed to, has in the past successfully done the work to kind of vet, explore, and make sure that new markets are real. There would be no SpaceX, and there would be no individual space exploration if NASA hadn't proved that it was possible, right? And so everybody who are moving into this, the Chinese, the Japanese, even the United States, have individuals who Elon Musk is just one of them, who are exploring space privately. Well, if without all of the money and time and energy and proof of concept done by the federal government, no one would be taking these risks. Well, similarly, in the financial markets, if this new credit bureau is established and the modeling, because you have to get a scoring model right, guys, like to get an underwriting model right, you have to test it against hundreds of millions of transactions. Well, if we have 50 million people, and let's say we only get 30 million of them out of the gate, 30 million people doing transactions for a year, that's 30 times 12. So you're looking at whatever that math is. If 10 months worth would be 300 million transactions. Follow me? And so 300 million, so that'd be 360 million for 1 year to be able to test these new models. Well, the federal government addressing this underdeveloped or completely undeveloped market of 50 million invisible borrowers. Imagine that then, once it's proven, all the current lenders will be able to trust the scoring models and the underwriting models and start offering traditional credit cards, traditional auto loans, traditional even more student loans, and especially mortgages. Mortgages are vital to this process. Imagine 30 million, 50 million more individuals, and that will contribute significantly to our gross domestic product, the expansion of and the stabilization of our what has been a kind of floppy economy the last year and change, right? So I will keep you posted on this, but 3 out of the 4, at least in this article, 3 out of the 4 are of the top tier banks, tier one banks have been listed as starting to share data on customer deposit accounts, et cetera, so that they can help qualify these people. So I'm thrilled about it. It's an amazing opportunity, and you're going to see more and more that we're here to teach fundability principles to everybody, because fundability principles, you don't have to have a traditional car loan. If you pay your bills on time and you do it right, as soon as we know what those underwriting criteria are, and we will know it, we're in with FICO, where we keep going to their symposiums, we keep going to their conferences, so that we can understand what is being measured. The more we know, the more we can pass along to these fundability principles now to 50 million more borrowers. So I'm excited, and we'll keep you posted more and more as we get more news about more banks participating. And the next news I want to know is which scoring model are they going to use? If they go traditional, because 90% of every lending decision so far is based on FICO. If they use the FICO Ultra and invite FICO in to start measuring all this new alternative data, then it's going to be a really fast, trustworthy system that's going to benefit a lot of people quickly. This is Merrill Chandler. Thank you for joining me today, and I'm thrilled to have you on this fundability path with me, so that you can stay up to date for everything that comes across our desk and opportunities to give you news updates.